Good morning and welcome to the first market update for 2023. I think most of us are glad to see the back of 2022, but let's have a quick look back and see how markets performed during that full year. Here on this chart, we've got the performance for the full year in percentage terms of 5 different indices, and these are total return figures, so they include the dividends paid during the year. The thick black line in the middle is the MSCI World Index, and that's arguably the most suitable benchmark for those with a global equity portfolio, and that was down over 15% for the year. At the very top in the green, we've got the UK's FTSE 100 index, and that was the only one to make a positive return in the year. And at the bottom in pink, we've got the very tech-focused Nasdaq Composite, and that was down over 30% in 2022. The other two are the S&P 500, which is a much more diversified US index than the Nasdaq, and then the FTSE Small Cap, which is focused on UK's smaller companies. We've also had a big divergence in the performance of different sectors, which is worth a look. Here's a heat map which shows the different sector performance within the S&P 500 for 2022, with the strong performers in the green and the losers in the red. You can see that energy has been by far the best performer thanks to high oil prices. Healthcare and utilities have been quite resilient, and these are generally viewed as more defensive sectors that investors tend to move into when markets are volatile. 2022 was a terrible year for tech and for growth-orientated stocks in general, and actually some of the best performers of the last decade had a really bad 2022. Examples on here being Google, Meta, Apple, Microsoft, Amazon and Tesla. We're now looking ahead to 2023, and the future of the technology sector is a big question for us. After such a strong decade, can it continue to grow at the same rate? Here we've got a chart showing the S&P 500 index over the last 30 years. The first pink circle shows the index at the height of the dot-com bubble, and at that point, the biggest 5 tech names accounted for over 20% of the index. A few years later, after the crash, they were worth just 5% of the index. At the market peak in 2021, the biggest 5 tech names were worth 25% of the index. So the question is, where do they go from here? The good news is that the big tech names at the dot-com bubble were much more expensive than the big tech names are today. Today, most names in big tech are genuinely profitable, and most of them are sitting on big piles of cash. So there are still lots of reasons to like big tech, but the question is, what is the right amount to have in a portfolio? We've looked at this question in a lot of detail in the latest issue of our magazine Confidant, which is due out next week, so please do give that a read when it turns up. And we've also scheduled a webinar on this topic, which will take place later in January, so please do look out for your invitation to that. Clearly, inflation was a big theme for 2022, and a lot of that inflation was driven by high energy prices. However, we've seen quite big declines in natural gas prices over the last few weeks, the reason being that this winter has been a lot warmer than expected, and therefore gas demand has been lower than expected. For example, in the Alps at the moment there's very little snow, and this week in Poland the temperature hit 19 degrees Celsius, which is crazy for this time of year. It's a worrying sign for global warming, but it could be good news for inflation for this year. Moving on to have a look at next week, we've got several companies scheduled to report. We're looking out for results from chemicals company Sika, from Tesco, JP Morgan and from United Health. That's it from us. Enjoy the weekend and we'll see you next Friday.